the industry. We do lots of consumer research. Here's a slide with a few of our clients on, and what I'm going to do today is run through some of the latest research that we've done with our partners GFS on basket abandonment. So looking at the true cost of basket abandonment, the strategies retailers are adopting to try to limit the impact of basket abandonment, and then also the nuances between consumer behaviors in terms of how they shop and what kind of impact that has. But before I get into the nitty-gritty of basket abandonment, I wanted to set the scene in terms of a bit of a macro backdrop, because the industry's just been through successive waves of challenges over the last few years. We've had COVID-19, we've got the cost of living crisis, we've had dislocated supply chains, and so there's been so many challenges that have been thrown the sector's way that they've had to navigate their way through. The cost of living crisis, of course, has been the latest challenge, and it's been a really tough environment for retailers. What this graph shows is essentially the cost of living crisis, and what we've mapped is inflation versus earnings growth, and you can see here that we've had 28 consecutive periods of squeezed income. So in terms of how much that has cost households in the UK, it's about £50 billion worth of spending that's been eroded over that 28-month period. We're having a brief respite in terms of earnings rising above inflation just for a couple of months, but then if we look at the Bank of England's forecast for inflation and earnings growth for the rest of the year and going into 2024, then we expect to see another 9 months. So the good news is that we're past the worst of it. We're actually about 80% through the pain of the cost of living crisis, and about 3/4 of the way through the cost of living crisis in terms of time. But we've still got some 9 months to go, and we've still got about £10 billion worth of spending that's going to be eroded for households running into the beginning of next year. We've also had this huge disruption across channels as well. And so we had the pandemic that caused a huge shift towards online. And so, of course, throughout those periods of lockdown, it was, for many instances, it was the only channel that we could shop in. And during that time, retailers, commentators like myself, economists were asking, what is that shift going to be? Is it going to be a permanent shift? If it's a permanent shift, is it going to be 1 year, 2 years, 5 years worth of acceleration towards online? And actually, now we've got the data to look back, we can see that there hasn't really been a permanent shift that the pandemic has caused in terms of that shift towards online. So what this shows is the size of the online market going from 2010 right through to 2022. That black line shows what trend growth towards online would have been up to 2019, and had there not been a pandemic, that's where we would have expected online, or the size of the online market, to have been anyway. So the orange line at the far end shows the size of the online sector in 2022, and the blue line at the end shows where we would have expected it to have been had there not been a pandemic. So essentially, we've still had that shift towards online. The online market is still bigger than it was in 2019, but actually now we've got the data, that shift towards online has gone back to trend growth levels. So the pandemic caused a blip, a shift towards online that's ended up being a blip. That's the two lighter blue lines there. It's a £54 billion blip, but essentially it's gone back to trend growth to where we would have expected it to have been. I think an important element to this, though, is the shift towards online is not just the point of sales. Digital has become a much more influential part of the customer journey, right from researching products, becoming aware of products, right through to technology and digital supporting each and every stage. But essentially, in terms of the point of purchase, we've gone back to trend growth. All of this is important because we've had all of those disruptions, and retailers' profitability is under enormous pressure. And sorry, I should have said this at the start. If you want the slides, my contact details are at the end, so just email me and I'll send the slides over. That's not a problem at all. So you don't have to take pictures, I'll send them over. All of that disruption, though, is in context of profits from retailers being under pressure. If you look at the top 150 retailers in the UK, this is what pre-tax profit margins look like from 2016. They've been under pressure, and generally speaking, top level, they've pretty much halved over that time. We've gone from about 9% to about 4% over that time. So why this matters in context of basket abandonment is that retailers can ill afford to let those precious sales slip through their fingers because they are not offering the proposition in terms of delivery that consumers are asking for at that point of purchase. Whether that's next day delivery, same day delivery, timed delivery slots, delivery to lockers, they need to cater for a range of different delivery options and try to reduce basket abandonment. And basket abandonment isn't anything new. So if you go back to 2018, there was a piece of research done by Barclays that showed basket abandonment cost the industry about £18 billion. So we know that it's an issue. And what we did in this latest piece of research with GFS is we surveyed over 100 retailers to see their perceptions around basket abandonment, where they see their priorities in terms of investment to try to reduce it. And we also conducted a survey across 2,000 nationally representative households to get under the skin of what really drives people's motivations around delivery as well. One of the key observations and really important takes from the research is transparency around delivery, whether that's delivery or returns, the cost of delivery, how easy it is to make returns. What consumers want is that transparency across every stage of the customer journey, whether it's pre-purchase, purchase, or post-purchase. They want to be able to have that information at hand. And if retailers are not giving that information at hand, even at the beginning of the customer journey, there's that element and the tendency for retailers, for consumers to abandon their purchases even before they get started because they want that transparency. And actually, there isn't any difference by age here either. There isn't, so age wasn't a significant factor. Right across the board, no matter the age of consumers, transparency was really important. When we look at the motivations for basket abandonment as well, and delivery, there is a significant difference by age group. And so, whether it's reliability, cost, choice, or speed, there's a continuous trade-off that consumers are making depending on lots of different factors, depending on the price point of a product, depending on the shopper mission at that particular time, but there's all of these trade-offs. But overall, what we saw is reliability is the critical component. Consumers want to be able to receive their orders at the promised time from a retailer or brand. After reliability, though, we see some significant differences in terms of the motivations. And so from an under 45 year age group, which we can identify as a kind of digital native group, these are consumers that have been born into a digital age and their dependency is a lot higher across digital technology. Essentially, after a reliability, then it comes speed and choice as the two most important factors. That compares to the over 45 age group, where actually cost is one of the most important factors after reliability. We also saw 4 really important consumer cohorts emerge within the research. The first cohort that we saw was dependable shoppers. So these are shoppers that essentially want reliability in their delivery. They're typically higher income earners as well, and middle-aged, but it's the most important element of delivery for them. We also found 26% of consumers that we called cost crusaders. So these are consumers that are prioritizing cost. They're willing to wait longer for delivery in some cases, choosing for free delivery or cheaper delivery. They're typically lower income households and also typically older consumers as well. 21% we found as choice champions, so this is where convenience is absolutely critical. They want the choice of different delivery options depending on the shopper mission. So they want the choice of next day or same day or time delivery or locker delivery or click and collect, but the choice and convenience element for them is really, really important. Typically younger consumers, typically higher income consumers as well. What it leaves is 18% that we called express enthusiasts, but as it suggests, it's all about speed of delivery. They want fast, immediate delivery, typically younger consumers, and they also are prepared to pay for delivery as well. Within the research as well, we wanted to challenge some of the preconceived ideas around delivery, and also the notion that free delivery trumps everything else. And actually what our research shows is that that isn't necessarily the case, not for all consumers anyway. And so what we found is when it came to a kind of a decision between free delivery and a range of delivery options, again there's this significant difference between the under 45 age group and the over 45 age group. So you can see there that 60% of the under 45 age groups say that actually delivery options are more important than cost and low cost when it comes to delivery. For the over 45 age group, it's almost the polar opposite. So 62% actually saying that cost is the most important aspect when it comes to delivery. But age being a significant factor, and actually consumers under 45 specifically being prepared to pay more. And this feeds into the next point around, are consumers willing to pay for premium delivery options? So this is same day delivery, it could be time delivery or next day delivery. And again, what we saw is this significant difference by age group. And you can see on this graph, what we're comparing is millennials compared to the overall average across the board. Again, it's kind of like one really interesting insight for this is that 95% of millennials say that they are willing to pay for some premium delivery options, depending on the type of product they're purchasing. The third myth that we wanted to bust as well was around returns. And we all know that returns are an incredibly complex challenge for retailers. It's a complex challenge, it's hugely margin erosive, and it's an issue that retailers are battling with in terms of trying to protect their profitability. So will consumers actually pay for returns? And there's been lots of nervousness around if we start charging for returns, then our consumers, our customers will go to retailers that don't. And actually what we've found is that consumers are willing to pay for returns that are seamless, that offer the ability to return products that are pain-free. And so actually 3/4 of consumers under the age of 45 are actually prepared to pay for some kind of premium return service that takes the pain away from returns. Over 45 age group, of course, less, well, as the data shows, there's less of a tendency for them to want to pay for returns. The other correlation that we saw is really dependent on how frequent they are in terms of their online purchasing. So the more frequent, the higher propensity for shoppers to buy products online, the more willing they are to pay for returns as well. So again, putting the customer at the heart of the business, understanding their motivations is key to adopting the kind of strategies and policies around delivery and returns for retailers. We also wanted to compare the expectations of consumers versus retailers as well across a broad range of areas. One of the biggest disconnects that we saw from what retailers thought compared to what consumers thought was around the range of delivery options. So on the far left, what you can see is that there's 83% of retailers think that they offer a wide enough range of delivery options for their customers, but actually only 48% of consumers agree with that. So So consumers are kind of want a wider array of delivery options depending on the type of product that they're buying and the type of shopper mission that they're on. And actually, when you ask them how many delivery options that they want to see, the average came out at about 5. So they want at least 5 delivery options from retailers in order to try to limit their tendency to leave things at that point of checkout. We looked at the 50 largest retailers in the UK. We scoured through their websites, we looked at their delivery options, we looked at all of the different range of delivery options. What we found was that on average, retailers, multi-channel retailers, offer about 3.5 delivery options, and pure online retailers offer 2.8 delivery options. So there's this gap between what consumers are asking for in terms of the range of delivery options versus what consumers are actually offering. And so on average, you've got there's about 3.5 versus 5. So all of these frictions in terms of the customer journey, and whether or not there's the tendency for consumers to shift their spending to other areas, what we've found is that the cost of basket abandonment is about £31.5 billion to the UK retail sector. So just to be clear, we're not saying that this is £31.5 billion of lost sales. This is £31.5 billion of sales that are displaced from retailers that don't match the expectations from consumers, and those consumers will decide to shop at retailers that do. And you can see most of that, £31.5 billion, is around limited options. Around £5 billion is around the delivery cost not meeting people's expectations. Around 4.5 is around speed. But essentially the vast majority is around delivery options, cost and speed of delivery not being met by retailers. And that's costing the industry about, like I say, £31.5 billion. When we asked retailers why it was that they felt inhibited to cater to the needs of their consumers, most of this came to around most of the kind of the barriers were around investment and capex, higher operational costs, and also the complexity of offering a range of delivery options and working with multiple carriers. But these are the areas that retailers themselves felt were the main kind of inhibitors in terms of being able to offer a multiple range of options. So within the research, what we do is we look at 5 different areas that retailers need to work on in terms to try to reduce basket abandonment. The first area we called our rule of 5, but essentially consumers really want 5 delivery options as a minimum. It's for businesses to decide how to try to integrate these delivery options at the point of checkout to try to limit basket abandonment. Working with multi-carrier partnerships is an easy way to try to address this situation. We've seen partnerships is such a key theme within the retail sector at the moment, partnering with the right companies to offer the right solutions. Some of that's around delivery, but some of that might be around cloud, some of that might be around other areas of logistics, some of that might be around leveraging AI and AI technologies. But partnerships is a key theme, and it plays a really, really important role within multi-carrier agreements. Reliability is a non-negotiable. Consumers want to be able to trust a retailer when they say that they're going to be able to deliver their products on time. There's a really interesting note within Next. Next brought out a trading update just this week. They were talking about capacity constraints and how capacity constraints were limiting their ability to deliver on a promise in terms of their online delivery. And you can see there they've made significant progress in terms of being able to make sure that reliability is a non-negotiable. The fourth area is around technology and just integrating technology and the solutions that they offer within that kind of within the solution set within deliveries, and finally just making sure that inbound is taken as seriously as outbound as well. So trying to work and figure out a way of making returns as seamless as possible, and integrating it back into the supply chain as efficiently as possible as well. So some shameless self-promotion. But if you want to follow me on LinkedIn, please do. Happy to answer any questions as well. If you want to download the research, there's a QR code there, so you can download the research. And also, GFS stands just over there. There's some copies of the research that you can pick up. But yeah, happy to answer any questions if anyone's got any questions. Hi. I think there's a mic on its way.
Has there been any research into paying for returns in line with faulty goods? Because I think my concern about paying for returns is that our rate of faulty goods would increase, because if something was sent back as faulty, they probably wouldn't be charged to return it. So I didn't know if there's ever been any link or research into that side of things.
To be honest, I'm not aware of any research there. I mean, I suspect that if it's a faulty good, I mean, it's the obligation of the retailer to take it back without charging for returns. Would be.
But I think the concern is that people would make the goods, some of the goods, faulty if they didn't want them, if they had to pay. I just didn't know if there was any.
Got you.
If you knew anything about that or not. Okay.
I'm afraid not. No, I'm not sure about that. Any other questions? What's the question over there?
Hi, very quickly. Have you been able to identify the cause of the very different approach between the over 45 and below 45? I mean,
sorry, I can't.
Have you been able to understand or to identify the cause of the very big different approach between the over 45 people and below 45 people?
Yeah. So in terms of the age difference and what are the main drivers between that, I mean, essentially it just comes down to a different level of expectation, I think, from consumers. And so the typical younger consumer is going to be much more digitally dependent on the customer journey. And so they understand that there's real value in terms of that digital dependency within the customer journey, and there's a willingness to pay for it. And so I think that kind of willingness to pay for delivery, pay for returns, pay for premium delivery options is just something that it's almost kind of like ingrained into their shopping habits, essentially. So, brilliant. Well, thank you very much. I hope you enjoyed it. Thanks.